This week is going to be critical for stocks, and we saw the VIX spiking up last week. Then we had a sea of red out there on Friday, and every sector was in the red. There was essentially nowhere to hide. So what does that mean for stocks? Are stocks headed lower, or could there be a bounce out here this week? Now, one thing I want to caution you guys on, when we come over and we look at the yield curve, we can see we are now uninverted. Now, when the steepening of the yield curve happens, this is normally when bad things happen in the stock market. Now, this week is going to be critical because we're going to get some more information, but one thing I want you guys to focus on is the fact that when the Fed goes on an aggressive rate cutting campaign, it always ends poorly for stocks. Now, one thing that was very interesting this week was the fact that when we looked at right before the jobs numbers came out on Friday, we actually saw there was roughly a 49% chance the Fed was going to do a 50 basis point rate cut. However, since then, as the day progressed, we actually seen the probability of that happening drop down to as low as 30%. So now the problem is investors suspect the Fed may have made a mistake, and who's been out there screaming all along? The Fed is wrong. One, the Fed was too late to start raising rates. Now, we all know that they're going to be behind the curve. And we look right here, the Fed outlook remains uncertain after September rate cut. On Friday, we had Williams and Waller start speaking, and that's essentially what was able to basically talk down that 50 basis point rate cut. However, when we come over and look at the SPY versus HYG, look how much the SPY has actually dropped off. HYG, yes, did come down a little bit, but not near as much as what we saw out there in the SPY. Now, also, we come over and look at the fear and greed index. You can see we're back over to fear territory, and this is something that we've been talking about all week during the live streams. In case you guys didn't know, I've been streaming live the New York session at 9 a.m. We had a couple of them go all the way until the closing bell. And if you want to make sure you don't miss out on the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But one of the things that we've been talking about on the live stream was the fear and greed index. And that was the fact that this time it's been a little bit different. And the fact that every time we get to neutral over into greed, boom, they smack it back down. If you think back to last year, every time the fear and greed index got into fear or extreme fear, boom, we were smacking right back over into greedy territory or even extreme greed. However, we've been struggling over the past few weeks to really stick over past neutral at best. Then we look at the most recent investor sentiment survey. We've seen a drop down in bullish sentiment. It went from 51 to 45. However, 45 is still high because the historical average is 37.5. Now, it's going to be very interesting this week when the survey comes out to see, do the bulls drop off even more so, or do they have even more confidence at some of these lower prices? Now, speaking of lower prices, come over and look at the king of AI, Nvidia dropping down this week. And if you believe what Tom Lee has to say, Nvidia stock slumped to end soon. And why should we believe Tom Lee? Well, it's very simple. Tom Lee has basically called that the next 8 weeks, this is going back to September 3rd or so, but basically the next 8 weeks, we could see up to a 10% drop in stocks. However, could it possibly be even more? Because if we come over here and we look at Nvidia and we measure right up here from all-time highs down to the closing price on Friday, we can see it's down 27%. Now, does that basically indicate that Nvidia is in a bear market? We come over and we look at the dollar index on Friday, forming a hammer candle. Now we have the potential for a double bottom pattern. Also, notice the MACD indicator as we came down, back down, going to retest this low. Notice what the MACD indicator has done. It has essentially made a higher low, and that could give us the juice that we need to get back up into this breakdown point. Now, if indeed this is going to be a double bottom pattern, I want to go ahead and map this out and see where the dollar might come to. Now, if that pattern does validate, meaning we break above the swing point right up here, that means the dollar could run to 103.32. Now, if that's going to take place, what does this mean out here for the gold market? We've been watching this ABC pattern completion up here at 25.86. In the short term, if the dollar goes up, yes, gold will go down, but that's not going to negate the ABC pattern that I've been watching out here for quite some time, unless we see gold getting all the way back down below $2,400. Now, if that does occur, that kind of changes things at that moment. But for all intents and purposes, right now, gold is just basically consolidating up here at these highs. Now, something that else is a little bit troublesome, not for us at the gas pumps, but the fact that crude oil has fallen off a cliff. We basically drew this horizontal line, mapping out this prior swing low. I said, if we cannot stay above that price point, watch out. We're probably going to come down here and start testing some of these lower swing points to the downside. Now, this is problematic because what is crude oil going down basically showing us? Is it basically foretelling that we are having a demand issue, aka a worldwide economic slowdown? Now, if we look at what sector performed the worst on Friday, we saw the SMH was down 4.13%. And the more and more I look at this chart, there's a lot of bearishness to it. For instance, look up here at this high. As price came up and made a new all-time high, and then we come down and look at the MACD indicator, we can clearly see the MACD indicator was not making a new high. And now we've come back up, forming essentially a lower high, and this could be part of a larger ABC pattern on the way down. If we simply mark that off, A to B, B to C is a corrective move. That gives us a price completion down here at about 171.50. And if you notice, it comes right into this other high volume area on the composite profile. I want to make everybody aware Apex having an 80% sale off all their valuation accounts, passed in as little as 1 day. And what's even better about this, there is $85 activation fee on all the accounts. So if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, if we come over and look at XLF real quick, notice the MACD indicator is coming down, about to start to cross with a bearish cross. Now, this is going to be critical. If financials are going to bounce, they must bounce off of this basically prior resistance level, should now act as support. However, if we start flushing down it, watch out. We have a gap below us at 43.07, and we're probably going to get the bearish cross of the MACD indicator, which would also set the stage that we are headed for a little bit of troubles up ahead. Now, we come over and look at KRE. Notice we have now come up to make a lower high. Now, it will be confirmed once we take out the low over here, but now we have a potential ABC pattern down in KRE as well. Now, that pattern will not be validated unless we come right down here and take out the B point. That gives us a price projection of about 49.40. And just wait, they have not even been talking about the commercial real estate market recently. Everything is going to come to an end at some point. And the question is it going to be this week? For instance, we come out there and we look at the economic calendar. What do we have on deck? Well, really on Monday, not anything to be concerned with. Then we look at Tuesday, essentially no major economic news. But then wait, on Wednesday, we have the core CPI data coming out, or CPI coming out at 8:30 a.m., followed by crude oil inventory numbers. And then on Thursday, we have the core PPI price index, the weekly unemployment claims. And I want you guys to pay very close attention. The ECB also has their press conference coming out, aka where they're going to be lowering rates. Now, they're going to come out with a rate statement at 8:15, but normally the euro will get rocking and rolling after 8:45. And the reason why I'm bringing that up is if the euro goes rocketing up, that's going to put pressure on the dollar. If the euro goes crashing lower, that's going to give more juice in the dollar to go up higher, as a euro is the highest weighting of the dollar index. Then as we scroll down and look at Friday, we do have a little bit of news on Friday. At 10 a.m., we have preliminary consumer sentiment, followed by preliminary inflation expectations. Now, if we come over and look at some of the indices out there across the board, we saw the Dow having a pretty down day on Friday as well, down 1%. And now we've got the bearish MACD cross on the daily chart. However, I want to come over here real quick and take a look at this on the weekly time frame. On the weekly time frame, we had the hanging man type of candle. Now we've basically closed below that area. And while we were coming up and making new all-time highs, notice the MACD indicator simply was not confirming those new highs. As we dive down and look at the 4-hour chart, we see I have a very bearish cross of the MACD lines down by the 0 line. Then on the 1-hour chart, you can see the MACD indicator starting to try to firm up here just a bit. Then as we look at the 30-minute chart, it looks like we're about to cross to the upside. Now, Monday morning, the first 30 minutes of the stream, we'll do a deep dive into analysis along with the other key levels for the Dow that we need to focus on. Now, we come over and we look at the small caps real quick out here on the weekly chart, looking like we're producing a lower high, which is going to set the stage for an ABC pattern on the way down. We can simply draw this like this, the A to B leg, the B to C leg right up here. That gives us a price completion right here in this minus development area, right around 190.65. Then as we look at the daily chart, you can see that lower high in place. MACD indicator is crossed to the downside. We look out here on the 4-hour chart, we have a bearish cross of the MACD lines. And notice we still have not been able to come over here and fill the gap. We came very, very close on Friday. However, not close enough. We need to get down to 206.71. We come over here and look at the 30-minute chart, and it looks like the MACD indicator wants to cross up. You can see on Friday, we had a big move down and basically just consolidating at these lows. And we got to ask ourselves, is this a bear flag pattern to essentially go lower, or is this consolidation for a little dead cat bounce, maybe coming back up towards about 210.97? Now, as we come over and look at the Qs, this looks glaring, very, very obvious that now we have a potential for an ABC pattern on the way down. We're going to grab the Fibonacci extension tool. We're going to measure the A to B leg, the B to C leg on the corrected move back up, and we project down for D. That will give us a price completion at 405.21. Now, if we measure from the high down towards that price point, that's about a 20% drop, right on the borderline of a bear market. Now, this will take some time to play out, but this is something I always say, be very mindful of. When the MACD indicator turns bearish on the weekly time frame, that's when we get some exaggerated moves to the downside. Then as we come over and look at the daily chart, you see we had that bull flag pattern. Obviously, that's not going to come to fruition. We've come way too low and we're almost down at the 61.8. Now, this would make sense. If we're going to put in a higher low, we need to start firming up right around this area. Then as we look at the 4-hour chart, MACD indicator still looks extremely bearish. The 1-hour chart, you can see the MACD indicator trying to flatten out here just a bit. Then on the 30-minute chart, you can see that consolidation, basically consolidating all afternoon. MACD indicator started to cross up. However, after hours, we actually saw the market tumbling a little bit lower. As we look at the NASDAQ, it continued to go lower. It's a little bit more evident on the 30-minute chart. And then we ended up closing with a hammer candle. The futures markets had a 632-point range for the NASDAQ on Friday. And as we come over here and we look, notice we closed below value area low on the weekly profile. So you guys know what that means. It sets up one of my favorite trading opportunities, which we'll probably be looking to target out here during the live streams. Now, the weekly value area low is going to come in at 18,714.00. Then we're going to have an untested point of control up here, 18,938.00. Then we have value area high at 19,191. Now, if we actually look, we had a 1,300 point range, 1,343 to be exact. And one of the areas we were watching was these 2 point of controls, one off the composite and the untested point of control off the weekly. We kept talking about this on the stream. Now, we do have a few minus development areas. So if the market is going to go ahead and bounce up, there are a couple areas I do want to pay attention to. And that's going to be right up in this zone right here. That comes right near value area low. So anywhere from about 18,661 towards value area low. But we also got to be very mindful as well that we could essentially have this bear flag pattern about to complete to the downside. That gives us a price completion down here, somewhere in the ballpark of about 18,292. And look, we almost made it there after the close. Now we come over here and we look at the 30-minute chart. You can see on the daily chart, we also closed below value area low. So we have a weekly, setup that I'm going to want to target along with a daily setup as well. I'm praying we get a nasty gap down come Sunday night. We have value area low coming at 18,248. The point of control will come in at 18,457.50. Value area high will come in at 18,756. Now, if we can get above value area low, we can hold above the point of control. We do have a minus development area, which also kind of correlates with this structure breakdown point as well. We talked about this during the live stream, and that's going to come anywhere from the ballpark of about 18,671 up here to about 18,722. If we can hold above the point of control, this could act as a magnet, and then we'll see if price can go ahead and make it up towards that area. We got to be very mindful. If we do, at the first time we come up into it, we could get some type of reaction, meaning we go sideways or we start to pull back slightly. So just be mindful of that if and when we get back up to that level. Now, as we come over and look at the SPY real quick, hopefully you guys can see this pattern very clear. We have a double top on the weekly chart. Top number one, then right over here, we have top number two. Notice on top number two, the divergence in the MACD indicator. It was making a lower high, and the MACD indicator has been cross bearish going all the way back to essentially July. So where would this pattern complete? If we come down and we can take out the swing point down here at about 510.46, then we can go ahead and we can measure this out. And that gives us a price completion at about 455.63. Now let's go ahead and measure from the high down here towards that price projection. That would give the S&P a drop of about 18%. Now, is it going to be shocks with the election? Is it going to be shocks about the recession that possibly gets us down towards that price point? We're going to have to wait and see. Now, you can see that SPY, we're able to close the first gap. We have another gap a little bit lower at about 533.13. Now, you guys always hear me talk about the S&P 500 loves to retrace the 50% level. That comes in about 538. And if we look right over here to the right, that comes right in a minus development area. This is an area where we can see the market start to firm up, maybe start to get a bit of a bounce, and then we'll see if we produce another lower high, and then we start working our way back down. On the daily chart, the MACD is extremely bearish at this moment. And on the 4-hour chart, the MACD indicator is showing no signs of letting up at this point. It looks like we want to come down and fill that secondary gap. On the 1-hour chart, now we did come down and we did start to base out here just a bit. MACD indicator trying to firm up. And on the 30-minute chart, we see that consolidation. We're trying to lift up. Now, ideally, what I'd like to see if we do not have a big gap down come Sunday night, maybe consolidate here a little bit and then flush the lows in Asia and then go ahead and pop back up. The MACD indicator looks like it may want to cross up, and it's extremely below the zero line, which makes it susceptible for a bounce. Now, when we come over and look at the 4-hour chart for the futures markets real quick, I want to go ahead and measure this pattern out. We're going to measure this out for the A to B equals C to D, and notice the S&P already completed that price projection at 5,400. Notice what else we were able to do. We came back and finally re-auctioned that minus development area. And I warned you guys, the first time we came into this minus development area on the composite, we bounced right back up to the high volume area. So watch out if we come back down. We're probably coming all the way towards this volume area right here. And you know what? We went a little bit lower than that point. And also notice we're closing below value area lows. So we have a very well-defined target for a bounce on the way back up. But again, we need to be very, very careful this week. The market has definitely shifted. We do not want to be caught on the wrong side of the trade. Now we do have value area low coming at 5442.50. The point of control will come in at 5532.50. Value area high will come in at 5565.00. So depending on how aggressive of a trader you are, we can be looking to target that value area low for the retest, and we'll see, can we hold above it? If so, then we can look for a possible rotation back up towards the point of control. And if you notice up here, we kind of had this consolidation. I'm going to go ahead and map this out, something like this. Now, it would make sense that maybe we overthrow, come right back up towards the bottom of that consolidation, and then we reject back down. If we pull a fib from that high all the way down to the recent low, what I want you guys to also pay attention to is the 50% level comes in right near this high volume area. Also, the weekly point of control, the 61.8 level, brings us right down towards the bottom of that upper level consolidation area. Now, as we come over and look at the daily profiles, these are some of the levels that we had marked off from Friday's live stream. This is a target location I will want to focus on. And notice on Friday, we are closing below value area low, which is going to come in at 5411.25. The point of control will come in at 5416.75, and value area high will be all the way up here at 5478.25. Now, I do think that there's a high probability that this week we're going to come back and test that level. We have very little news come Monday and Tuesday, so maybe stocks will drift a little bit higher as we start coming into that CPI data. Now, I want to caution you guys, if the CPI data comes out horrible, watch out. We are going substantially lower. Now, I want to remind you guys of this stat that basically shows Septembers tend to be very, very bearish months of the year. Now, to make sure your payout does not get denied by My Funded Futures, watch this video on micro scalping right here.